You're watching Inside Automotive with Jim Fitzpatrick.
Hey everyone, Jim Fitzpatrick. Welcome into another edition of Inside Automotive, exclusively right here at CBT Automotive Network. The automotive buy-sell market is experiencing notable shifts. Joining me now with more on the current state of this market is Ryan Kerrigan, Managing Director of Kerrigan Advisors. Thank you so much for joining us today, Ryan.
Jim, thanks. Good to be with you.
Sure. So let's jump right in here. You know, as we roll into 2024, I should say the second half of it, please give us some intel on the state of the buy-sell markets that we see.
Yeah. Hey, continued good news coming from the buy-sell markets. The hit parade continues. So in Q1, 109 announced transactions. That's an all-time record.
Wow.
Actually continues to be up year over year. We are on track. We could actually see the first ever 400 transaction year in the history of the industry if things continue. So
400.
That's the pace that we're on. We came close in 2023 to achieving that level, and at the current track record, we'll actually be above that.
That's fantastic. Wow. So is activity up over 2023?
It is, yeah. In the first part of the year, it actually is.
Okay.
And as you and I have chatted, as I've shared before, we would anticipate that we might sort of go along with the other sectors of M&A where you've seen transaction activity down consistently in the last couple of years. And we just have not seen that in automotive retail. We have really stood out. And that sort of speaks to a few things, but one of the things that we attribute that to is just the massive retained earnings inside the industry, in an industry where people want to continue to invest.
Yeah.
So it's one thing to sell a big company and then maybe you spread it out and you start investing in real estate. But in automotive retail, retailers are sitting on tremendous amounts of cash, and retailers by and large want to continue to invest in this industry. So it's leading to this continued activity.
Wow, that's fantastic. But our profits are down, right? I mean, that's that across the board. And what kind of an impact is that having?
Yeah, profits are turning down a little bit, which is no surprise, right? I mean, just go back a couple of years ago, you're looking at sort of average new car front end of like $6,000, you know, which is just a number that was hard to even fathom, right, a few years ago.
Sure.
So we've come down a little bit. On a trailing 12-month basis, we're down to like 7%. So not radically down, but down a little bit.
Yeah.
And that is absolutely starting to kind of filter into some expectations, some questions, but obviously not enough to bring down overall activity in the marketplace. Overall activity for buy-sells remains incredibly high.
So what impact does all of this have in trying to get an accurate value on a deal? How are deals getting valued today? This is very unique today.
Yeah. And so what we have today is a intense focus, and I would even say like a fixation on the part of some buyers on the most recent earnings. Mm-hmm. So folks, more so, you know, if we kind of take it back, there was a time when we were sort of blending pre-COVID and COVID earnings, and then we were sort of, you know, averaging the last 2 or 3 years. We had sort of different ways to bring buyers and sellers together as we went through this big market cycle. Today, the focus is on what have you done for me recently? They want to see the most recent results. They want to see trailing 12 months.
Sure.
And they want to see Q1 and Q2. And that's just the nature of buyers who are still leaning in and they're still being aggressive, but they just want to make sure they understand what they're buying because the market is in fact shifting pretty quickly.
Yeah. In the Blue Sky report, you always highlight some important trends that you see being played out in the industry. Let's talk a little bit about that.
Yeah. So one of the big trends that we talk a lot about in the Blue Sky report is kind of going back to a theme that we've talked about over the years, but we're seeing renewed interest, and that is outside capital.
Yeah.
A lot of folks use the term private equity, and just to be clear, technically, most private equity firms are not allowed to invest in our industry. They can't get OEM approval. But there are other types of outside capital, professional capital, that can be carefully laced together with dealership groups. And so what we're seeing is that as these platforms are getting bigger and as there's more professional management, more comfort in perhaps bringing in professional capital, it's starting to happen. And so you're seeing some of the faster growing groups are linked up with outside capital. That gives them incredible sort of liquidity. They're now not constrained by their balance sheet. And in the last couple of years, we've seen a 45% growth year over year in the number of stores owned by groups that are backed with outside capital. So right now, we estimate over 450 dealerships are owned by automotive groups, controlled by traditional dealer operators, but backed by outside capital. So it's a phenomenon relatively young in our industry, but starting to accelerate in a very meaningful way.
Sure. You also discussed the importance of captive financing sources. Talk to us about that.
Yeah, absolutely. And so this is sort of an era where the captives are really starting to shine, if you will, and show why they can be so important. Interest rates have gone up dramatically. So if you're just a financial institution, if you're a bank, you need to pass along those expenses to the consumer. So instead of getting 2 and 3 and 4% loans, now we're talking 7, 8, 9, 10% loans. And we've seen that. If you're a captive, there's a bigger game to be played, right? It's about supporting your OEM. It's about keeping the factories running. It's about supporting your dealer network.
That's right.
It's just a bigger game. They also have some, frankly, some inside information. They understand the products better. They understand kind of what they're financing better. And so you saw, for example, captive financing for new cars up over 60%. So market share has gone up dramatically in the last couple of years.
Wow.
And so for dealers who are partnering with OEMs that have got good credit ratings, and then can support very aggressive captives or very competitive captives, it's a huge differentiator with interest rates being as high as they are. So that's where, like Toyota, for example, with their massive balance sheet, is in great position. Anyone with a credit, sort of credit grade balance sheet benefits today. So that, I mentioned Toyota and Lexus, for example. The German luxury marks largely fall into that. Hyundai and Kia fall into that as well. So they've got a benefit. They've got an advantage in today's marketplace.
You also emphasize the importance of fixed operations in today's environment.
Yeah, that's right. So again, predictably, we've seen new car front-end gross as well as used car come down. They spiked up for a couple of years to levels that were perceived to be abnormal. And it turns out they were. They're coming down a bit, but dealers are growing fixed ops in a very meaningful way. So for the last couple of years, fixed operations have been growing revenue at 6 to 7%. We know fixed ops gross margins are incredibly high, so that drops a lot of money to the bottom line, and that's been a big part of why dealers have been able to maintain profitability so well. It's interesting. The U.S. fleet is older today than it's ever been. It's 12.6 years was the data that I saw most recently.
Wow.
So this has been trending up from 9, 10, 11, 12. Now we're 12 and a half.
Sure.
And so just a lot of vehicles on the road, and for even with SAR being relatively high, we've got a massive and relatively old fleet, and so fixed operations is a good place to focus.
They're going to benefit from that in a very big way. What states are you seeing dominate the buy-sell market right now?
Yeah, of course, Smile States, Southeast, themes that we've talked about, but I would put a focus on Texas right now. It just seems like all roads lead to Texas. We've sold 17 dealerships in Texas in the last 12 months.
Oh my gosh. Wow.
I can tell you the energy and the interest for Texas dealers and those outside of Texas looking to get into the state is incredibly robust. And so I would, if I kind of had to say there's one place where there's a tremendous amount of energy, a tremendous amount of focus, I think it's Texas. And that's backed up. So maybe just a little bit in contrast to Florida, a phenomenal market.
Sure.
But Florida, major relocation from the Northeast, a little bit of reverse migration that's gotten some press recently. Texas is just attracting businesses. They're attracting headquarters. They're attracting headcount. It's very robust, sustainable growth. People move there. They have kids. They grow their households. They're buying bigger houses. They're buying more cars, et cetera, traveling more miles, buying more cars. So
that's
just
fantastic.
Phenomenal growth drivers in that state. And
are there any particular areas, obviously a big state, any particular areas of Texas that are hotter, or just anywhere
I would say
in
that
Texas?
really all of the major metros of Texas are quite strong. It's there. I can think of other states where you'd say, well, if you're sort of in the north versus the south, if you're in this one major metro, and certainly I got to say that Texas, there's a half a dozen very sizable cities, all of which are very, very strong. I'm sure there are parts of maybe the more rural parts of Texas that I'm not going to know as well.
Yeah, sure.
But certainly for major metros, just across the board, cities with very different flavors, very different cultures, different industrial base, but nevertheless strong growth drivers.
Yeah. Austin has been red hot. Obviously, that's
Absolutely.
the home now of Tesla and other major companies that have moved there, right? I mean, that area has just been red hot for the last number of years.
It has been,
you know?
and actually gotten pretty pricey.
Yeah.
I know that, for example, home prices. Texas used to be a draw for inexpensive home prices.
That's right.
That's certainly not the case for Austin anymore.
That's right. That's right. Are there other markets to pay attention to?
Yeah, California is often publicized for sort of a lot of the issues that make the Golden State, the biggest state in the country,
Sure.
hard for dealers, hard
Yeah.
to operate. And I will say, for all of those well-reported issues, we are getting large deals done in California. Ultimately, the market size, the affluence of the market,
Sure.
overcome some of those operating concerns. And so next month, we'll have an announcement of a sizable California deal. We'll probably have another announcement a month after that. So we are finding ways to get very attractive transactions done in California, notwithstanding some of the negative headlines and the exodus that you read about in the Wall Street Journal and that kind of thing.
Sure, sure. So it seems as though the OEMs have had somewhat of a wake-up call here with regard to EVs and EV production here in the last, I guess, 6 months to a year, where it's like, the market just isn't there the way they hoped it would be there for EVs. How have OEM profits shifted EV production plans?
Yeah, I mean, gosh, you and I saw this coming, right?
Yeah.
I mean, just these open-ended mandates coming top down, OEMs jumping onto this. The odds that we were going to have that kind of wholesale shift in that time frame. I know you were a skeptic. We were certainly skeptics.
Yep.
And thus far, that perspective has borne out. I mean, the numbers announced by, Ford, for example, has broken out numbers, and you might remember the stats, but the losses per EV sold were tremendous.
Crazy.
I mean, they were big dollars.
Absolutely crazy.
Whereas they were having to not only make all their money in the ICEs, but that they had to offset all the losses in the EVs. And at some point, you have to pull back. And they have, for example, pulled back. And so you've seen Ford and GM both walk back very significantly, kind of their stated intentions.
That's for sure.
Roll out. The German luxury manufacturers, for example, as well. There's a lot of social pressure on those European companies to continue on this EV path. But even, for example, in a Porsche shareholder meeting recently, there was just a lot of pushback on Porsche's announced plans to shift to EV. So they're right now meeting sort of reality in a very harsh way, and pulling back. Ultimately, it's just not going to happen on anything close to the timeline that was proposed, and so that's starting to play out right now. That's
right. I mean, to see Ford backtrack on their program for those dealers that wish to sell EVs just 2 years ago or so,
that's right.
They came out, rolled out the program, and got everybody up in arms about it, and then for them to roll back that, or roll that entire program and say, wait a minute, maybe we jumped too soon here. And meanwhile, dealers that already made millions of dollars in investments. So it's really.
So Ford lost a lot of trust with the dealer body. The way they chose to do it. At that time, they felt that they had to do something big and aggressive and jump into this and really force the dealer body to go with them, and in the process, hopefully weed out a lot of the smaller dealers, is what kind of seemed to be the strategy was. So there was a lot of trust lost. It didn't work. So now there's credibility lost. And so there's no question that these are tough issues that these OEMs face. I don't want to minimize the big decisions that they need to make, but as it relates to distributing and retailing Ford products in the United States, it was very, very costly.
There's no question. And Farley, who went into the job, into the position as kind of a dealer's OEM. A lot of people liked Jim Farley and what have you, but I think he's lost a lot of that clout and a lot of that capital among dealers. Where now some of the dealers that I talk to, very large Ford dealers, are like, hey, they need to make a change there, in that seat. So we'll have to see what happens there. But It's unfortunate. From your perspective, why do you think EV sales have been so disappointing? Just infrastructure situations and.
I think it's really an important example of just how and where the decisions were made. I mean, ultimately, the US government chose the bluntest sort of tool at its disposal, which was just basically kind of a blanket EV mandate saying this massive industry is going to shift very quickly. And it failed miserably. It did not achieve the outcomes. And again, I think you and I probably share a view. I don't have a view or an opinion on what EV market share is 20, 30, 40 years from now. Who knows? Maybe
right.
It's a big, very important part of the industry.
Sure.
The notion of, this gets right back to like centralized planning. This is what we sort of, this is why we don't think that China in the long run is probably going to be that economically successful. This is why the Soviet Union imploded, the Warsaw Pact imploded, because centralized planning, when you take these very substantial decisions too far up the food chain without understanding sort of how they work. And so again, we made these federal mandates and the industry was not ready. The infrastructure was clearly not ready.
Oh yeah, for sure.
I think in the Wall Street Journal over the weekend, there was some discussion of the many billions that we've spent at the national level on EV charging, and at this point, 8 stations have been made available. 8 stations.
That is crazy.
And we are in the middle of 2024.
Yeah.
And then ultimately, the consumer wasn't ready.
Yeah.
So nothing was ready for this mandate, and so the market got flooded with EVs that consumers were not ready for. Massive losses on the part of the OEMs. And it also, I think that if from a capital perspective, if you think about so based on our estimates, we kind of took a look at all the major OEMs. We estimate that almost $500 billion in accelerated R&D was put forward by OEMs to jump into the EV future.
$500 billion.
Wow. Ultimately, and you only do that if you're jumping into some massive fast growth market. Well, the EV market today is flat and possibly shrinking. So the idea of hundreds of billions of dollars spent to jump into a market that's not growing, that doesn't make any sense.
That's right.
So huge losses. Had it played out in a more orderly fashion, they would have made much smaller investments over time, maybe getting up to the big numbers over time, and it would have had the market signals and the market feedback that you need for success in anything. And that was all lost. So ultimately, a really costly decisions that has not achieved the agenda, which was to kind of
not even close.
The green EV.
I guess the good news is that the EV sales are growing, just at a very much smaller rate than what the OEMs had projected.
They have not been growing in the last 2 quarters. They haven't even been growing. I think
that's true.
You're going to see some growth here in coming quarters, but it's going to be simply driven by the fact the number of products that are being launched is so substantial that we're going to have to move them. The dealer have to move them. So I think that there might be a little bit of an uptick just based on supply of new products. Whether or not that ends up being sustainable, we'll see.
That's right. So for the $64 million question, maybe I should say $164 million now if it's strong franchise. What's from your perspective? What's the strongest franchise? And I guess I should quantify that by saying, is it the strongest requested franchise? Is it the one everybody wants? And or is it the one that's the most profitable? And maybe those things go hand in hand. But what's from your perspective? What's the strongest franchise out there?
I'm not going to shock anybody here by saying Toyota and its sister Lexus. But what I will say is, it's a testament to where Toyota is in the marketplace today. Every week, we get outreach from someone who will tell us one of 2 things. I only want to grow with Toyota, or I look at other stuff, but my priority is Toyota. And we have that conversation. Last week, I got a call from a dealer who sold a large group. He's been out of the industry for a couple of years. He decides he wants to come back in, and he said, I will only buy Toyota. When you have Toyota opportunities in my geography. I mention that because that is a recurring theme. So for Toyota dealers, for Lexus dealers, you have gems. They are in extraordinary demand today. And in the buy-sell marketplace, that really is the gold standard. And if we go back, for example, we talked a little bit about the rollout of Ford. And by contrast, what has Toyota done in recent years? They were by far the most careful, the most muted on EVs. They're not anti-EV. but they were very careful. They
That's
didn't
right.
just sort of try to make a leap. They never, ever, unlike a couple of OEMs, have talked about agency models, circumventing the dealers. They
Yeah.
have emphasized time after time after time, we've got the best dealer body in the United States. We're partnered with them. And having sat last Thursday on the East Coast with one of the larger Toyota dealers in the eastern part of the United States, the level of loyalty and the level of credibility that Toyota has with its dealers is
Yeah.
really, really remarkable. So again, it's not shocking to talk about
No.
sort of
No, it's
Toyota
not.
being
It's not.
attractive, but it's a level of sort of commitment on the part of dealers to that OEM I think is worth calling out.
That's right. So if you are a Toyota dealer in the state of Texas, you're you're sitting on a true gold mine, right?
Well, you are. We've announced 2 Toyota stores in Texas in the last couple of weeks.
There you go. There you go.
Absolutely. These are very, very valuable franchises, no question.
That's right. That's right. Ryan Kerrigan, Managing Director of Kerrigan Advisors, thank you so much for joining us once again on CBT News. Whenever you're on, man, we get a ton of views on the content that you provide to us. So there's a lot of dealers that listen to what you and your wife have to say about the market, and so we appreciate it very much. Thank you so much.
Thanks, Jim.
Thanks.
Thanks for watching Inside Automotive with Jim Fitzpatrick.